Hello, you. Welcome to today's backtest video, the second backtest video for the month of April, and also happy new month to you. So the backtest for today is going to be on this up close candle right here for 31st of March on Tuesday. That's yesterday. So before we go through that, we're going to do a bit on review on gold on what has played out so far. Okay, so from March from the month of March, there has been a drop down in price on gold so far, dropping down into this inefficiency right here. Let me zoom this out. This is a BC. Okay, this is a weekly chart. Sell side buy side imbalance, sell side inefficiency, meaning only buy side delivery was offered at this particular zone, which I annotated. Okay, with this rectangle, and price is running down to offer what? To offer sell side. Okay, because there is absence of sell side. That's why it's called a BC. Buy side imbalance, sell side inefficiency. It is inefficient of sell side, and sell side delivery is being offered. And why price traded down into this level? Okay, this is another block on the weekly. Actually, down close candle followed by this up close candle. Okay, so this down close candle, this is a bullish order block. And price trades into it. Also trades. It didn't trade into the body, though, just the wick, and trades into this BC, this inefficiency on the weekly. And if we go to the daily, you see that okay, price has traded down below these lows. This a low, and this also a low, and this low at the left is slightly lower than this one at the right. Okay, so these are relative equal lows, and resting below them is sell side liquidity. Okay, that's why I annotated this below sell side liquidity, and price ran down. Okay, that's on 23rd of March. Price ran down to take out this sell side liquidity, and you see this sudden run up in price, leaving this week below. Now, after price took out this sell side liquidity, right here, this relative equal lows, and this is a relative equal lows. Okay, and after that, you can see a sudden surge up in price. Okay, where is price actually running up to? Price running up to take out buy side liquidity and also to run up into inefficiency. So you see this eye right here. Okay, this is buy side liquidity being taken out when price traded up. Okay, at this very day, we should be doing the back test, the 1st of March. Okay, so the moment price trades above this eye, it has taken out buy side liquidity and also inefficiency. This one day CB, this is a CB, sell side imbalance, buy side inefficiency, meaning only sell side delivery was being offered at this particular zone right here, at this particular level right here. Okay, and price will run up. So this is an inefficiency. Okay, it is inefficient of what? Buy side. So price will run up to offer what? To offer buy side to it. This is another CB also. Okay, this is a CB. I didn't annotate this one. CB above price. Okay, if price is willing to rally up further, it would run up into this CB as well. And let's see where it goes from there. But for today, this is where our backtest lies, 31st of March. So going down, so 31st, this is 31st of March, start of 31st, 12 a.m. And also your charts, your time zone should be set at New York time zone, just as mine. Now on this day, after the London session at 6 a.m., okay, after the London kill zone at 6 a.m., you can see price trading down into this 1 hour CB, this inefficiency, okay, to rally up. And when you come to the 15-minute time frame, okay, why price traded down into this 1 hour BC, this 1 hour inefficiency, okay, it's also trading below this low. See these lows? Okay, so price trades below this particular one right here, the lowest, trades below it, and suddenly it rallies up, okay, above this short-term highs. Okay, so this is a shift in market structure. So these lows right here, okay, is sell side liquidity being taken out. Okay, so this sell side liquidity being taken out, and you can see this rally up in price. And you can see, let me take this off. This is the Monday's first presented fair value gap actually, but we can see price didn't actually make use of it for this particular trade, so I'm taking it off. Okay, so you see the fair value gap right here after this break of structure. Okay, so we can spot a fair value gap on the 15-minute time frame. You see how price traded down into the fair value gap. The first touch on the fair value gap was at 9 a.m. and the second touch on the fair value gap was at 9:30. 9:30 is the market open. So immediately the market opened. Okay, it's opened at this point, ran down, and from there just started rallying up and never came down below these lows. Okay, after it traded down into this fair value gap. So I know some of you don't only see this fair value gap, you also see another block, this down close candle followed by this up close candles, right? This is another block. But if you use this other block as your entry point, let's say your buy limit is at this other block, okay, your buy limit won't be filled. Okay, price won't fill your buy limit because price only traded down into this fair value gap. Okay, so apart from the fair value gap, another way of which you can enter the trade comfortably. Okay, before I go to the other discussion, okay, if you use the fair value gap, this is where you can set your stop loss. Okay, so your stop loss can be either at this low or at this low. This is safer. Okay, so your stop loss is at this low. It's a good point to place your stop loss. There's nothing wrong with that. So like I was saying, apart from the fair value gap, okay, of which you can use as entry points for this trade, you can also use your breaker. You can use your breaker as a point of entry also. So for those of you who do not know about the breaker, I've made a video, okay, a video specifically. I've made a video particularly for the breaker, okay, so you can find the video on my previous backtest videos, or you can simply go to the 2022 model, the playlist, the 2022 model playlist, and look for the breaker video. Okay, it's titled breaker block. It's titled breaker block. I can't remember the dates at which I posted it, but it's titled breaker block, and I explained the breaker there on that video. Also, it must not be from my video. Okay, you can watch it from the source. You can watch it from ICT himself, Michael Huddleston. So I pinned his playlists, a link to all his playlists on my video description. I normally pin his link to his playlist on my video description, so you can go there and click on the fourth link. Okay, once, so you can click on the fourth link on that playlist, the fourth playlist. Click on it. That's ICT month for core content. There it talks about uh different PD arrays, the other block, fair value gap, breaker block, and so many. Now the breaker block. Now you see there's this now before this rundown in price. Hmm? Before this run down in price, this series of down close candle to run down this sell side, this low right here. Okay, there's a series of up close candle. Okay, so is the breaker block is the last up close candle, or the last series of up close candle before this. This is for the bullish breaker actually. Okay, the bullish breaker is the last up close candle, or the last series of up close candle before this run down in price to take out sell side liquidity. So this range of up close candle can be considered as our breaker. Also, this up close candle, this one in particular, can be considered as our breaker. How is that? Okay, so let's use the series of up close candle first. And you see price trading down into it. Okay, so while placing your buy stop at the top of this breaker, your stop loss can be at this level, something like this. Okay, here's a good way to trade the breaker. Also, like I said, your breaker is also this last up close candle before the series of down close candle to drop down in price to take out sell side liquidity. The last up close candle. Okay, and you see price trading down into this particular one. Okay, while trading into this fair value gap. Let me make this a different color. Okay, so let's identify the breaker on other time frames. So if I go to the 30-minute time frame, this is my breaker. This is the last up close candle before it drop down in price to trade below sell side liquidity. Okay, so trade below this low. So this is a breaker. I see price trading down into it as well. And on the 30-minute time frame, we can also spot this other block, which price didn't trade down into. Okay, but there are sometimes price might trade down into the other block actually. Okay, but in this case, price didn't trade down into the other block. That's why you need to have more tools on your arsenal for entry. Okay, in case one doesn't work out. And back to the 15-minute time frame. After price trades down into the breaker and also this fair value gap, it rallies up, takes out this high right here, and formed another fair value gap here in price. Okay, so this is another fair value gap, trades down into it, and then rallies up, continues to rallies up for the whole day. It rallies up slightly into this 1 day CB, daily CB. So these are the daily CB looks. Okay, like I said, price would rally up to inefficiency in price. Okay, so this is an inefficiency. This is a daily CB. Sell side imbalance, buy side inefficiency. Only sell side delivery was being offered at this particular range in price. Okay, so price would want to rally up to offer buy side. Okay, so I hope you found this one insightful. I know you found this insightful. Drop a like, subscribe, and do not forget to turn on the notification to receive notification if I release any backtest video. And if you are new, you can follow up with the ICT 2022 model mentorship playlist, which will be displayed on screen. Okay, so you can go through the playlist, start from the first video, and just like that. So you can start from the first video to the current video. So I started the playlist on January. Yeah, January. Okay, so the playlist has been on from January, and I'm still adding more videos to the playlist. So until next time, have a productive month.